Hello and good afternoon. Welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and my colleague Yatin, Mota. Well, Yatin, we are once again ending the day in the green itself. Nifty is now up for the fifth straight day, and this time we held well above that 24,850 levels despite the expiry swings that would have played out. Sensex also did well, surged over 300 points, and sectorally it was the day for IT stocks on the back of Infosys buyback news. We'll discuss that in a bit, and that's why the optimism was felt in the entire tech pack as well, and that's what drove the markets higher as well. But apart from Nifty IT, Nifty Pharma also did well. However, the pain was felt in the Nifty IT auto index that has been up from the past 4 days, but it did see some profit booking with counters like Bajaj Auto, Tata Motors, Hero MotoCorp seeing some pressure in today's day. But yes, Yatin, day was once again in the green, but market breadth that continues to remain towards the declines.
Absolutely, and if you look at the markets today, they continue to remain volatile. However, the Nifty managed to gain 100 points. However, the mid cap side of the market was slightly weaker. In fact, it traded most of the days with losses. Same is the case with the Nifty Bank. Minor gains coming in there, and probably the reason why we had a 1:1 kind of a advanced decline ratio. But broadly, a very stock specific day. And as you were mentioning, clearly it was the entire IT pack which was firing up, which led to this market rally on a one-side basis.
That's right. Let's take a look at some of the gainers and losers then on the Nifty. Definitely it was the IT stocks that did well on the back of Infosys buyback news, and that is why you can see Infosys with about towering the Nifty 50 charts with about 5% gains. Wipro also doing well with about 3% gains. Tech Mahindra, HCL Tech also seeing gains of up to 2% each as well. On the other hand, pharma stocks, like I was mentioning, that did well. So you can see the heavyweight, that is your Dr. Reddy's lab, with about 2.6% gains coming in from there as well. Adani Ports, Bajaj Finserv, some of the other gainers on the Nifty 50 as well. However, on the way down, we can see Trent, which is down for the second consecutive session, 2% downtick coming in for the counter as well. Eternal seeing some profit booking after yesterday's move, and of course Nomura initiating that buy coverage. That is why we can see a little bit of a profit booking on the counter as well. 1% downtick coming in for Eternal. Geo Financial 1% cut. Titan also seeing more than 0.5% downtick for Titan as well, down for the third consecutive session. Tata Motors and majority of the auto stocks did see some profit booking after the GST optimism, and that is why you can see Tata Motors, Bajaj Auto, all of them seeing a cut of more than 0.5% as well. On the other hand, if you look at the broader end of the markets, they saw minor gains. Small caps up about 0.3%, mid caps also flat in the green, and both of them extending the gains to the third consecutive session as well. But yes, coming to the movers and shakers of the broader end of the markets, Yatin will take us through that.
So if you look at the broader end of the market, stock specific action continues there. In fact, if you look at Gujarat Fluorochem, that stock moved 8%. Asian Construction Equipment, and we have news reports suggesting that the government is looking to give construction equipment sector a production linked incentive scheme in which they will be looking to improve the production and the capabilities of construction equipment. So that stock moved 8%. Railtel, after the order win, was up 5% in trade today. What was not doing well is Balrampur, Chini 3% down, India Cement down 3%. Paytm also witnessing some profit taking. That stock also fell nearly 3% in trade.
That's right. Now let's quickly delve into the stocks that did grab limelight today. We'll discuss the first stock in focus. That was the top stock of the day. That is your Infosys. 5% uptick coming in for the counter on the back of the share buyback news. The company does plan to mull the share buyback in just 2 days, and this will be the first buyback that the company will be considering in the last 3 years. That's why the stock did see some good momentum in today's trading session. The idea of any share buyback is to repurchase the shares, reduce supply and bolster its demand, or EPS for that matter. And given the underperformance that we have seen in the overall IT and of course the Infosys stock also, this news comes as a positive development, as it is expected to boost investor confidence at a time when the sector has been grappling with issues of tariff uncertainty, macroeconomic standstill, and cut in the enterprise spending as well. Now, the last buyback which Infosys did was in 2022, and it had spent about 93 crore rupees to buy back shares from the open market. In fact, the last 3 buybacks that the company has carried out by Infosys was through an open market and not via the tender route or tender offer route as well. But yes, following the announcement, we did see brokerage firm Morgan Stanley saying that they find the buyback announcement to be quite interesting, particularly in the context of a macro uncertainty. They believe the room for the potential buyback size to be between about 10,000 crore to about 14,000 crore rupees. And historically, the buyback price has been at a premium of about 18 to 25% to the current market price. So the stock did see some good buying interest in today's trading session ahead of its buyback proposal as well. But Yatin, if we recall, out of the IT pack, Infosys, that was the outlier in the June quarter performance because it delivered a beat June quarter performance. And this buyback does spell good news for the stock. But however, experts have been saying that, if ahead of the buyback, it's not really worth it to invest at this particular current market price.
Yes, 2-3 things. Number one is 45,000 crores worth of cash sitting on the books, cash and cash equivalents. So they have that firepower to do a buyback of 10 to 12,000, 13,000, 14,000 crores. Typically, they have been using 30% of their funds into the buyback, mechanism. Number two, good for shareholders because this is a tender buyback, which will be initiated if the board approves that, because SEBI has discontinued with market, open market purchases during buyback. So the tender route is the only route. Probably investors look at it from the dividend perspective. And also, if you talk about the uncertain times because of which IT stocks have been trading at valuation multiples, which are, at a 5-year low or, lower than the 5-year average. Plus, on the valuation front also things have been looking quite bleak because of the uncertainty. And probably this buyback does two things: reward shareholders, and the uncertain time is something wherein you use your cash and probably stabilize the share purchases as well as the sentiment in the market. So yes, we have this move coming in for Infosys, and investors clearly giving it a thumbs up, almost 4% higher for the stock.
That's right. Now let's move on and talk about one particular cement stock wherein CLSA has given an outperform rating on the counter. That is your Ambuja Cements. They've given out a target price of about 665 rupees, which means that they see about 15% of upside potential from the current levels itself. Now, the entire GST cut news that we did see on cement from 28 to 18% is already keeping cement stocks quite in the positive momentum, and this brokerage note also comes at the time of that. They believe that the GST news will have a positive impact on the realizations of Ambuja Cement, and lower indirect tax can add benefit to the premiumization story as well. Near-term demand, however, that could see a little bit of a subdued hit because of the monsoons and the deferred purchases as a result of that. But CLSA analysts projected medium-term growth of about 7 to 8%, with potential for this to go up in double digits as well. But if you look at the demand trends for the cement sector in the last month, it did drop by 20 to 25% on a year basis due to heavy rains. There were certain labor shortages and sand mining restrictions as well. However, majority of the companies still remain quite optimistic, and they have retained their FY26 volume guidance as well. So yeah, then if you look at the June quarter performance for all the cement majors, they were upbeat. And now this GST cut is quite sentimentally positive for the sector because it could also bolster the demand for the housing projects.
Yeah. Yes, this will probably boost the demand for housing projects, and clearly we have the cement pack, which is one of the key beneficiaries of the GST cut. However, you look at the cement stocks post the GST cut announcement, they haven't done much. In fact, today also if you look at Ambuja Cement, that stock remains under pressure. But yes, overall basis, we have the entire cement pack, which will be a key beneficiary of the receding monsoon, good monsoon. And obviously the GST cut post the festive season, we usually see the construction activity pick up.
That's right. Okay. Right, let's now move on to one railway stock, that is your RailTel, because that stock significantly moved in this market. 5% uptick coming in for the counter after the company secured multiple order wins from Bihar Education Project Council. Now, the order was for more than 700 crore rupees, and the largest orders include procurement, supply and installation of smart room classrooms at government middle schools and at secondary and senior secondary schools as well. The company has also won contracts for supplying teaching and learning material for classes 1 to 5 in government schools, and all the contracts are domestic in nature, and they're expected to be executed between December to March next year itself. And the company has been receiving good orders back to back as well. If you look at the last month, it did win order from Kerala State IT Mission for about 35 crore rupees. And again, they also won an order from BSNL as well. As a stock performance, it did hit June high of 486, but since then the stock has been, spiraling downwards itself. Yatin, the June quarter performance was mixed for RailTel, while top line did well, but margin pressure that pointed out to some execution challenges that the company has been facing. And now with so many order wins that the company has given, it depends. It's a key monitorable whether or not this railway stock does well in the coming days.
Correct. The order wins are quite strong, and the share reaction also after the recent order wins, we have seen it move up sharply for the case of RailTel. But since we are talking about cement, another beneficiary of the GST cut is obviously the FMCG pack. Today we have Jefferies, which has come out with a report on HUL. They have a buy with a target of 3,000. Now, HUL's CEO, the global CEO, Fernando Fernandez, outlined the strategic initiatives of the company. In fact, they believe that India will be a key growth driver for the parent company, and India remains, when it comes to the strategic focus of the group. Now, we have seen Unilever particularly talk about India's operation, the growth potential that they have. In fact, the CEO also stated that he has a lot of confidence in Priya Nair, who has been the new CEO at Hindustan Unilever. Now, they believe that the parent's agenda, the growth alignment is there, which would lead to a better performance, and also the medium-term growth is expected to track India's nominal GDP growth. So yes, when it comes to the growth opportunities, HUL's parent Unilever believes that long-term growth and prospects still remain, and that is the reason why the entire FMCG pack, especially HUL, was doing well in trade today.
That's right. Consumption stocks have been in focus ever since the GST news has been rolled out. And that's why we're seeing a good momentum and all. And of course, the brokerage upgrades coming in for majority of the consumption related stocks as well. But yes, that's all the stocks we've had so far. Good week so far. But whether or not this gains extend throughout the week is what we'll be tracking and hoping for as well. But yes, introducing your Moneycontrol Super Pro, which will be your ultimate investment superpower. You can get all the live trading calls and investment ideas from SEBI-registered experts, pre-identified chart patterns, and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro is where the serious investors should stay ahead, and you can download the Moneycontrol app and subscribe to Super Pro today itself. Alright, with that, we have come to an end of this edition of Closing Bell. It's a wrap from Yatin and me. Thank you for watching, and we'll be back with markets tomorrow.